taps into the zone, higher low, high, then it aligns bearish right there. You take the trade and we're running into profit. So you can see there are trades everywhere when you pick the right supply and demand zones. And there is that internal bullish one. I just want to show you a couple of examples. We have an OB right there. We have a range. The market pushes into it. Lower low, lower high, lower low. How does the lower low form? With a massive sell followed by a massive buy. Okay, so you know, I've seen this pattern. I know this pattern. Ilya taught me this pattern, right? The market comes back. Where does it hold? 50%, right? Even here it went to the 75% as well. Okay, but spot that I didn't do this. What I did is the whole leg, the whole sell to buy. So again, I do not refine because I've refined way too much to enter like with a 1 pip stop loss. It just doesn't work. I'm telling you for now. In this case, it worked great. So you could have entered a trade from here with a 1 pip stop loss and you nail a massive banger. And that's fine if you want to do this. But the majority of the times, you're going to be missing trades. Okay, so there are a couple of examples, right? And we're going to jump on the chart so I can actually show you how it works. Another concept I actually want you to understand is the fractal nature of the market. So what I just showed you is the fractal nature of the market. We drew 50-minute zones in the same way we drew the zones on the 1 minute as well. Okay, so the same things will repeat on every time frame. Price doesn't know time and time doesn't know price. So very important, kind of a mind-shifting sentence right there. I still kind of find it hard to really accept this one, but it's true. Right? So price, which is the way price moves, it doesn't know the time. It doesn't know the time frame. And the time frame doesn't know the price, right? Because price is price. It's all the same. Different time frames are just a different representation of price, right? And again, as I said, there are patterns within patterns. So we can have that same thing on the hourly, the fake move, the push, the retest. Within this hourly demand, you can have the same thing happening on the 15-minute. Right there, the 50-minute gives you a range, manipulation, pushes outside, comes back to retest. Within right here on the 15-minute retest, you can have the same thing on the 1 minute. And this is pretty much top-down analysis. This is why all you need is 3 time frames to be profitable: a hard time frame, a middle time frame, and an entry time frame. And all you do is apply the same pattern, of course, with some more kind of additional stuff. So hopefully it makes sense. There are a couple of additional things that I teach in my program. One of them I call the RIM. This is kind of a real sauce. It's a very deep understanding that one can have on supply and demand, but I'm gonna keep it away from now. It's pretty much like how actually does the order block form, what are the different phases within the order block, and how you can actually trade it, right? But again, we're not gonna be covering this in today's video. Another one that is also worth to have a look at is order flow. So right, order flow, how the market goes up, how the market goes down, and how you can actually follow the order flow and really know who is in control. But once again, order flow is spotted within market structure, combining it with supply and demand. So right now I want to just jump on the charts and actually find as many examples as possible, because I want you to see me, how I draw those zones, how I look into them, what are like the different little details that I said, like if it's not clean on one time frame, how do you drop it on another time frame and draw it right? And we're going to be focusing on multiple time frames and also combining right now supply and demand with market structure. So we're going to be spending some time right now on the charts, and in the next lesson, I decided in the next lesson we are going to touch on liquidity, because for me to lay out all the liquidity concepts, I know it's going to take me another 40 minutes, and I don't want this video to be, again, 2 hours. So we're going to do it in a separate video, which is going to be easier for your learning journey. In the meantime, if you have any questions about the theory, about what I mentioned so far, let me know in the comments, okay? What is unclear? Is something that I explained not making any sense? Am I speaking BS, right? Do you find hard to understand something? Let me know, because again, apart from those lessons, later we can be doing additional lessons with more examples and all that stuff. Because my mission is to help you prepare with all the foundations, to give you that knowledge so you can start making progress, and then you can come to me as a mentor so I can actually coach you towards consistency, towards the right mindset, the right system, right? Because what I give you right now is a lot of things. It's theory, right? But it's a separate thing to actually put it into a system that is replicable, right? And you can do this every single day, every single day, every single day, and see consistency in your trading. So let's jump on the charts. All right, so here we are on an empty EU chart on the 4-hourly time frame. I'm completely freestyling this. I don't have anything prepared. We're just gonna go on, find some supply and demand zones and on different time frames, walk you through it, how I draw them, how I've set up my chart. So let's go. First of all, on my rectangle, I have around 4 to 6 different things. I have higher time frame demand, higher time frame supply. That is 4-hourly and 15 minutes. Okay, so if you actually have a look at my settings, those appear on every single time frame because I want to see them. Okay, and then I have a lower time frame demand, which is only on the 1 minute, right? And I think 5 or less. What I also have is the manipulation, right? So this is what I told you about, like that fake move, which we can try to spot right now. And what I also have is a range, because again, usually the manipulation happens below or above a range, or of course it could be a single high or a single low, which we're going to be speaking in the next video. Okay, so I actually want to start with a trade that I just took this morning, just right now, because it's very fresh in my mind. So what are we having right now? Here, the market broke structure to the upside. You immediately track it back. What caused the break of the structure? It is this one right there. So I'm going to tell you it's this one. Is this a clear zone? No. So the last sale candle is this guy. So in this case, I can either take it like this, or what I'm going to do in that case is I'm going to do 5-hourly time frame. The candle is clean, still not engulfed. 6-hourly, not great. 7, nope. 8, nope. So you can see in this case, so there it is on the 9-hourly time frame. We have the spin bar that is engulfed by the next one, immediately came back to retest, and then it pushed. So again, if you want to be precise and if you just don't want to be dropping zones, then you can do this. Always go upwards of the time frame you are at. Don't go downwards. So I'm not going to go to the 3-hourly, to the 2-hourly, and the 1-hourly to refine, because then you get too refined, because then what you're going to do is you're going to do this. Right, and yeah, you can see this one worked in terms of intraday, but I'm just looking at this major zone right now. Usually, I'm going to draw it like this. Okay, here, for example, the market broke structure to the upside. Okay, we track it back. What is our major high low? It's this guy. Okay, so what is our demand zone? Well, you want to take the last sell candle usually, or you want to take the candle that is engulfed. Another great example of how the market is not perfect. Like in this case, I only took this one. Is this engulfed? Yes, it has a little bit of imbalance right there. If you're looking at imbalance, it caused the break of structure. What you can also do, 5 hours. Do we have something? It's pretty much the same. It's a slightly bigger candle. 6 hours. Let's check it out. 6 hours. It's even bigger. So I'm going to take this, right? 7 hours. Do we have actually a bearish candle that is engulfed? Not really. Okay, so maybe 9-hourly. No. So in this case, we just don't have it. So your task is to make this as bigger as possible so that you have wiggle room and the market comes in here to actually take a trade. Okay, so then we can jump into look at what happened on the 50-minute right there, what happened on the 50-minute right there. Right now, let me actually show you my trade for today. So where is the market right now? It's making a massive lower low. What is it? It's oversold. Okay, what did it also do? It created a new 4-hourly break structure right there. It made a lower low and it came in and took out this low. Okay, so what I'm going to teach you in the next lesson is that, again, old lows and highs like this, they have a lot of liquidity. So when a low like this is taken, usually a pullback initiates. And this is why higher lows and higher highs form. When you have a high, higher low, higher high, above this high, there is liquidity. So when it's taken, usually the opposite side of orders are triggered. So then the market pulls back, right? Higher high, then the market pulls back again. So when I saw this high being taken, and pretty much I didn't even see this high at first. Oh, the market is at a lower low. Cool. What are my options? To either continue flowing with the market down or look for a counter trend. Then I drop to the 50-minute time frame. Let's read the 50-minute. What do we have right there is our Asian range. So if you haven't watched my Asian range video, it's a good time to do so, but I think it's actually going to be even a better time after the liquidity lesson, right? So what do we have right there is, again, I'm just tracking structure. We have break of structure right there. We have break of structure right there. And then what happens all of a sudden is the market creates a trend change. How did that happen? Let me ask you, right? With this. So what I do is right there, it's manipulation. That is our sell to buy that caused later a trend change. So if you were early in this market, 7:15, you can be looking to take a trade from here. Because this is the last sell candle that was engulfed, caused the trend change, pulled back, and gave you a long trade. What the market does later is it makes a break of structure. What caused the break of structure? So again, as I keep saying, the market is not perfect. All right, it's not perfect. This is the bearish candle. right? But you can also take this one. So what I will do in this case is go to the 16 minute, not really, 17 minute, not really. And I'm here just to tell you that there is no clean candle to take exactly in this example. But I know that we have a breakout structure. What is my major high low? It's this guy. So there is demand within this major high low. Okay. So what I did is I dropped to the 1 minute. So there is that, where is the first trade? Yeah, there is the first trade. So again, how do you take the first trade? The market pushes up, it creates this sell-off, and then it buys, right? And what you can see precisely before the big buy, what do we have? Is this sell. Where does the market go? Precisely 50% of the last sell to buy, okay? I do this with the Gann tool, all right? So this is the Gann box, and I have it like this. 0, 50, 75, and 1. And almost no background, right? So there we go, 50%, boom. This is actually an entry model we have. It's called the 1 minute continuation, Fanatic entry model number 3. The market continues to push up, right? And causes a 15-minute breakout structure. What do I know is that there is demand within it right there. So also liquidity has been taken. I'm not gonna speak about liquidity in this lesson. We had a trend change precisely right there. So then look at this, right? Same thing on the 1 minute that we do, same thing on the 15 minute. There is our breakout structure. That was actually a trend change. What caused this breakout structure? It's this guy, okay? What do we have actually right there is we have a massive sell to buy as manipulation. What did that do? Range, and massively went down, took everything. Where did it go? Into the previous sell to buy. And what did it tap? 50% on the spot. Right, so there were quite a few trades this morning, but I don't trade at 6, I don't trade at 7, I trade after 8. So I could have taken this, but I was looking for a confirmation because I don't trade aggressively. Push, pull back, I took the trade here, stop loss below the major low, and there is my 4-hour trade. So lovely trade this morning, right? Right now, actually, there is a short I just missed. The short. I'm actually looking for it on my other screen. I'm looking at it on my other screen, and I was gonna take it, but again, I'm doing this for you. But let's break it down. What do we have? A little bit of a choppy market right there, but let's just follow price. There is a breakout structure right there. What caused this breakout structure? According to me, it's this low right there. It actually could be this low, but I'm gonna take this one. What happens is we have a trend change down. What is our major high? It's this one. Where is the supply? It's this one. Is this a valid supply? Yes. It's a nice bullish candle that is engulfed by the next one, and it caused the breakout structure, right? What I do is I drop on the 1 minute. The market comes in, grabs the liquidity. What does it do? Takes out the high. What caused this high? It's this one. So there's our trend change. Man, I should have taken this trade because it actually broke on this candle, and you can already be in from here with a massively tight stop loss. But I was actually looking to take it from here. I was just monitoring this chart. I should have maybe paused the video. But let's see. I mean, we have a live trade running. So let's see if we can get our 4 hour in this trade. Again, why from here? Well, pretty much again, what caused this break? It's pretty much this whole, again, buy to sell right there. So this is where I would eventually be looking to take a trade if I get a good stop loss, and I will be looking to like go break even after, yeah, break even and trade management, separate lesson. So there is another trade. I did not pause this video and take this trade because of the time. It's I'm currently not trading. At 12 o'clock I stopped trading, and usually like 20 to 15 minutes before that I also look not to trade, because then the market is getting into chop state and I'm happy with my win. So I just decided not to take this one, but let's see if it works out. Okay, so again, textbook setup. So let's go back to the 4-hour time frame, practice a little bit more. I wanted to break down this right there. So we have a massive push up, we have a very nice pullback. So let's actually do this, right? And go and explore what is happening within this demand on the 15 minute. Okay, so what is all of this? So I'm giving you a quiz right now. What is all of this? Right, what is all of this right there? I hope you know. This is internal structure of the 4-hourly range. 4-hourly high low, 4-hourly high. Dropping on the 15 minute. Let me break down this internal structure. It could be a good lesson. On the 15 minute, this is where we created the trend change. What caused the trend change? It is this little guy right there, which again is not clean, but this is the last buy that caused the sell and caused the trend change. In this case, what we can do is we can do 25 minute. There it is. 25 minute buy candle, massive sell causing the trend change. However, I base this on my base time frame, which is the 15 minute. All I do is 4 hourly, 15, 1. The only time I switch time frames is when I want to take a nice zone, but I pretty much know how the zone is going to look like on the 25 when I'm on the 15. So I pretty much knew that if I go on the 25, this is going to be a clean OB right there. What does the market do? Comes back, chops for a little bit, and then at the end of the day, it explodes down. Exactly right there, it caused the break of structure. Do we care what happens right there? No, this is all internal. This is our, again, remember the exercise. This is our major high. This is our major low. Anything between these two levels is internal. Of course, this is where we're going to be looking for an entry. So do you want to drop to the 1 minute? Have a look if we got an entry. Let's do so. All right. So we come in. Ooh, this is very, very, very choppy. So let's see. Here, higher high, boom, trend change. What caused the trend change? Very clean OB in this case. There it is. So what do? Is we take our trade. How do you take it? Are you going to take it from here with a 1 pip stop loss? Are you going to take it from here for a 6 pip stop loss? I don't know. As I told you, if you have this big buy, you draw your gun box, and we don't know where the market is going to stop, which is why I always say if you get a good stop loss, just get into the trade. Personally, I'm going to do it from the 25% because it gives me a 5 pip stop loss.